What is going on with the interest rates? How will it affect your ability to purchase a house? How will it affect you as a seller? I'll answer all of that and more right after this. Hey, this is Lisa Alford with Talking Jacks. Today we are going to discuss interest rates. Oh, the joy of it. Not. I mean, it'd be great if they just let us borrow the money for free, right? Before we get started, if you like this video, please be sure to give it a thumbs up, ring that little bell, and make sure you subscribe so you don't miss any of our future videos. So you may have heard the rumor that interest rates are on the rise. Well, yes, they are. The feds are trying to get control of our inflation situation by raising interest rates, and historically this does work, but the rise in interest rates has a lot of people concerned. Buyers are concerned because they are being priced out of being able to afford housing. Sellers are concerned because they want to know if it means that they'll have to lower their prices. Let's take a look at what's going on and see where we stand. Len Kiefer, the deputy chief economist of Freddie Mac, was recently quoted as saying that mortgage rates are likely to continue to move higher throughout the balance of 2022, although the pace of the rate increases is likely to moderate. Much of the increase in rates early in 2022 is in anticipation of what will happen later this year, especially with Federal Reserve interest rate policy. That's interesting. So let's look a little further into what he might be referencing here. The average interest rate rose from 3.11% on January 1st of this year to 4.67% by the end of March. That's a serious and steep increase. The difference that makes in a loan of $250,000 takes a loan payment from $1,068.90 to $1,292.09. That's an increase of $224 per month in your mortgage payment. While to some that may not seem like much on the surface, when you add in the fact that most buyers were already pushed to the breaking point on the pricing of the homes in the market, the increase is sharp and quite painful. For some, it has pushed them right out of the market. The feds had warned us that they were going to raise the rates a good bit this year. Many thought maybe as high as 5% by the end of the year. So what effect will all the rate increases have on the price of homes? I may need to get that crystal ball out for that one. All the experts do agree that we are in uncharted territory here, but we will try to analyze it as best we can in the next few slides. This slide shows us historically what has happened when the rates rise more than 1% and what the results were. If you look down at the bottom where the averages are, you'll see that an average 9% positive effect on prices, average 4% negative effect on home sales. But none of these take into account the super low inventory and demand levels we are currently seeing. I believe the outcome will be that we will see that we still have an increase in the home prices, but it won't be as super sharp increases that we've been experiencing. Remember that just here in Florida, we saw an increase of 26% in home prices last year, and nationally the increase was around 19%. Many people are asking, what about new construction? Well, home builders have been trying their best to catch up on the demand. If you'll remember from last month, I told you that per NAR, we are around 5.8 million homes short right now. Well, all of that began back in 2008 when the economy fell apart and many builders went out of business. On this slide, you'll see that for 14 straight years, the builders' production has been below the 50-year average. All the while, the demand has been rising because of the population has been increasing. For a number of years, the millennials were content living at home in their parents' basements, but that eventually came to an end and they bought their starter homes. But now they're starting to grow their families and need to expand to larger homes. And Gen Z is out there looking for homes too. And let's not forget about all the baby boomers and older Gen Xers that are looking to downsize, and the influx of migrants coming into the country as well. They all need housing. So per the numbers, the builders are just now getting close to being at that 50-year average number. But we are so far in the hole because we are trying to play catch up for all those years of non-production coupled with population growth. So as we move forward, what will happen with the values that have risen so high today? As we can see by the appreciation projected by the Home Price Expectation Survey, Most of the people who pay $360,000 for a home today will see an increase in value of $96,342 over the next 5 years while we are filling the gap of housing needs. This projection is based solely on the increasing home equity. The survey states potential growth in household wealth, but it very clearly states that it is solely based on increasing home equity during that period. Wow, that's a lot of information, right? Whew! So, what does it all mean for today's home buyers and sellers this year, 2022? Here are the projections of 7 forecasts from 7 different professional groups in real estate. The green column is the average of all 7, and it states that we will see about a 6.7 increase in prices nationally this year. Please note that I'm very careful to say this is nationally and not for the state of Florida or anywhere else below the Bible Belt. The southern states have seen the biggest increase in people migrating to them from other states. Therefore, their house values have gone up even higher than the national figures. Again, I point out that nationally last year we saw an increase of 19% in home values, but here in Florida it was 26%. Based on that, I'd say here in Florida we can probably expect to see around a 9 to 10% increase in the home values in 2022. So, if you're a home buyer, you are likely looking at similarly priced homes slightly higher, but your interest rates will be higher. So you may need to adjust the purchase price range that you are looking in. Many of you have been looking for several months, maybe even a year or more. So be sure to check with your lender and get an updated idea of whether or not you can still afford the same purchase price since the interest rates have gone up. If you are a seller, you will likely experience a similar market to what has been going on. You may even be able to ask for a slightly higher amount than a few months ago, but be forewarned that the number of buyers has dwindled some due to the higher interest rates and affordability factor. Make sure that your real estate professional is taking that in consideration when helping you price your home. It's generally better to be priced slightly under where your target price is and let the market naturally drive it up or do whatever it's going to do. The worst thing you can do in any market is to overprice your home and let it sit on the market. Are all of these things set in stone and 100% going to happen? Absolutely not. The real estate market is ever changing and anything can happen. This is just the information at hand and the direction it appears that things are going in. My job as a real estate professional is to educate you on the information at hand and help guide my clients make their own educated decisions. On the flip side of all this, I even heard one financial expert stating that he believes the feds will be forced to lower the rates back down because of the affordability index. That's always a possibility too, and personally, as a home buyer myself, I hope it does. Either way, I think that the home price increase we saw last year won't be repeated this year, simply because the buyers can't afford it and won't be able to pay it. And remember, if you or someone you know is looking to buy, sell, or invest in real estate, reach out to me. I'm happy to assist you any way I can and make sure that you are making educated decisions so that you can win in today's real estate market.